And again, we want to thank you, everybody, for being on this call today with Monica Rebella CPA and president of Rebella Accountancy, which is a CPA firm that specializes in accounting, tax, and consulting services for hundreds of dentists in California. Our call topic today is Social Security and Medicare planning tips. If you are not a client of Rebella Accountancy, or if you have not met her, Monica Rebella is a CPA and has 26 years of accounting and tax expertise, which includes 13 years working with Big 4, Big 8 firms, and over 13 years experience working with dental practices. She is past president of the Orange County Long Beach chapter of the California Society of CPAs and is a member of the AICPA. She has conducted training sessions for accounting firms as well as lectured on tax and business matters to the California Society of CPAs, UCLA Dental School, and the Orange County Dental Academy. She runs her own firm in Tustin, California, providing accounting, tax, and consulting services for over 300 businesses throughout California, specializing in dental offices and small businesses. Monica, welcome to the call.
Thank you, Jeff. It's great to be here, and thank you to those of you that are spending a little bit of time this evening to listen to this. I get a lot of these calls. In fact, I got calls today about Social Security and Medicare. So I thought, this might be something of interest to some of my clients, so I'm going to send it out there in a webinar. So here we are. I'm going to go to the next slide because I want to give you an idea of what we will discuss and what we're not going to discuss on this, because this is a lot of information and a lot of planning. So I'm kind of just going to hit tips. This is tips. It's not meant to be all-encompassing. I'm going to go through quite a bit, but there is a lot to making these decisions. So we're going to talk about when you might want to begin to take your Social Security, when your spouse might want to begin to take Social Security, and if you're still working, should you sign up for Medicare? So these are the kind of things we're going to talk about. What we're not going to discuss, I'm not going to make any calculations of how taking Social Security at 62 versus 65 versus 70 might look, but we're going to talk about it, and I'm going to refer to you to some great places that actually will give you some additional information. I'm not going to talk about what kind of Medicare insurance you should sign up for. That's something that you would need to chat with, and I'm going to give you information about who to talk to that if you need it. And again, that these are tips, and further analysis will absolutely need to be made for each of your situations, but it gives you food for thought. Okay, so we're on a slide. It says when to take Social Security, and I put age 62 with a question mark. So here's the first things that we've got to make sure of before we can even think whether we get Social Security or not, is that to be able to get Social Security at all, you have to work for 40 quarters. You have to have a work history of paying into the Social Security system for 40 quarters. And when I say withheld or paid, withheld would be if you've got a paycheck, and paid would be if you are self-employed. Because if you're self-employed, you pay self-employment tax, which is Social Security and Medicare. So you're still paying into the system if you are self-employed. So I'm going to go into the next slide. So planning for self and spouses. So again, for this 40 quarters that you have to come up with, you only need to make $1,200 or more a quarter for that quarter to count towards the 40 quarters you meet. So, we used to say as long as you've worked for 10 years, you've got a paycheck for 10 years, you're in. And that's actually true. As long as you're making $1,200 or more a quarter and you've had 40 quarters, which is 10 years, you're good. So anytime during your lifetime. The next slide, I want to take it, age 62. So again, if you're 62 and you're thinking, I might want to take it early, why not take it while it's still here and you're still working? Here's the little catches here. So if you're still working and you're 62 and you make more than $15,480, that's the amount for 2014, it changes every year. For every dollar over the $15,480, for every $2 over the $15,480, you lose $1 of Social Security benefits. And my friends, you don't ever make this up. It's not like it's in your account and you're going to get it later. You actually lose it by starting early. So, an example, if you earned $30,000 or self-employment profit of $30,000 and you're 62, and you want to take your Social Security as well as have that kind of profit, you are going to have benefits reduced by $7,260 for the year, or $605 a month. And that's quite a bit. So you need to really think about it if you're going to start taking them early, because it can be quite a reduction of the benefits you think you might be getting. I think we're all used to getting those forms that come in the mail around our birthday where the Social Security Administration would say, hey, here's your benefit if you're full retirement age. Here's what it would be if you're 62. Well, if you pay attention, they're not sending them anymore. You actually have to go to the Social Security website and create an account for yourself, and then you can get this information. It's really easy to do, and they will then have that information out on the website for you that can give you your specific information about what would you get if you're 62, what would you get if you're 67. If you're full retirement age. The only caveat is that it's ongoing, right? So they're making assumptions that your last number that was your wages is going to be the same number going forward until you take your benefits. So you've got to be a little careful when you see their calculations. Okay, so that's if you want to take them early. And I will tell you that on the Social Security website, because I went and looked at all of this, here's what basically it says. If you're 62 and your full retirement age is 67, and you want to start taking your benefits at 62, your benefit is going to be reduced by 30% of what it would be if you were at full retirement age. Okay, so that's kind of the concept there. So if you take it early from your retirement age, it's about 30% less than what you would get at full retirement age. And then every year it's different. So if you wait till 63, they say it's 25%. If you wait till 64, it's only a 20% differential. If you wait till 65, it's 13%. And if you're at 66, it's only a 6% difference, because the next year you would be full retirement age. So every year closer to your full retirement age, the more that you get, the less reduction that you get, okay? So your full retirement age, let's say you're 65, and you can take your Social Security. 65, again, may not be your full retirement age. You need to check that out with Social Security. Here's the date ranges. If your birth date is between 1943 and 1954, your full retirement age is 66. So for every birth year after 1954, it goes up from 66. It goes to 66 in 2 months, 66 in 4 months, et cetera, et cetera. So really the range right now that most people are looking at is between 1943 as your birth year to 1954. That's retirement age, full retirement age of 66. So it really isn't 65 anymore for most people. Okay, and if you're unsure, check the Social Security website. They have great information there. So we're going to go to the next slide. So there's another catch, your full retirement age. Okay, so whatever it is for you, you're at full retirement age. Here's a little catch about that. Let's say that it's not January 1st. You weren't born January 1st in any particular year. You were born sometime after that. You are only allowed to make $41,400 before you turn your full retirement age, or your Social Security benefits will be reduced for that year that you turn full retirement age. Okay? So again, it's a little catch about taking them before you actually reach that 66 in 2 months, the 66 in 4 months, whatever that full retirement age. You can only make $41,400 before you reach that threshold, or again, your benefits for that 1 year will be reduced, and it's not as if you make it up later. Okay? So the next slide that we're going to go to would be, let's say, again, you lose $1 of benefits for every $3 now of everything over 41.4. So let's say your full retirement age is 66, and you turn that in June, half the year. And let's say you're still employed and you made $50,000 by June. So in this scenario, your Social Security benefits would be reduced by $2,866.66 for the year, $2,866.66 for that year. And it's just the year that you've turned full retirement age where you've made more in that period of time until you turn the full retirement age for Social Security. So there are little things about taking Social Security before that actual time Social Security said you can take them at full amount. Just little things to keep in mind. Okay, to our next slide. When to take Social Security, wait to take Social Security. So here's the deal. If you don't need Social Security and you can defer it for a while, you're much better off deferring it. Okay? If you don't need it, you have other ways, you're still working, you have a good retirement plan with your financial advisors, and you're in good shape, and you really don't need that Social Security, you can do what's called having delayed retirement credits. You wait, you suspend, okay, and you get delayed retirement credits. What that means is you're not going to take it at your full retirement age, and you get an 8% flat increase for every year you wait until you're 70. At 70, there's no more increase. But if you wait from full retirement age to 70, you get an 8% higher amount each year you wait from your full retirement age. So it's actually very good if you can wait, and you don't have to wait all the years. It's not like you have to wait till you're 70 if you decide to suspend. You can wait 1 year. You could wait 2 years. You could wait part of the year. You could start taking it and then say, no, I'm going to suspend. So you don't have to say, I'm going to suspend till 70, and you can't take it anywhere in between. At any point, you can go back and say, no, now I need it. But for all the time that you don't take it, you're getting an increase. So it's kind of a nice thing if you don't need to pay it. Here's a little wrinkle, and it has to do with Medicare. And we're going to talk about Medicare in a second. But if you suspend your Social Security and you don't take it at full retirement age, and you have signed up for Medicare at 65, and 65 is not your retirement age, you know that they will bill you for Medicare. And that's the same thing. If you suspend and don't take your Social Security until later, you've got to realize you've got to pay Medicare just like any other insurance payment. So if you don't pay it, you don't have Medicare, because there is no Social Security benefits for them to take it out of on a monthly basis like they normally would. Because normally when you get your Social Security benefits, before that money hits your bank account, they've taken out the Medicare premium. Okay, that's how it works. But if you're not getting Social Security, they have to bill you. You've got to pay it, and you've got to make sure you pay it timely so you have Medicare coverage. So make sure that you understand that if you're going to take Medicare before you stop working, or even if you're not taking benefits. Okay, we're going to switch here to talking about the spouse and lower earning spouse, and when should a spouse take it. So we've talked about if you want to take it at 62, just be careful of the $15,480 that you start losing benefits if you're still earning some money. If you want to take them at full retirement age, you certainly can or are entitled to, but you have to turn that full retirement age, or they will reduce your benefits if you make more than $41,400. That's the number for 2014, but you're certainly entitled to. Or you can suspend. You can say, I want deferred credits. I'm going to wait past my full retirement age. I want that 8% increase every year until I'm 70. So that's the things about you taking Social Security. But let's say you have a lower earning spouse, or maybe you're the lower earning spouse. How can we work this out? Here's some planning things. And again, this is why it gets complex here. If you have a lower earning spouse, and their benefits, if they took them themselves, would be less than your benefits, your lower earning spouse can suspend their benefits to get that 8% increase after they turn full retirement age and take it on the higher earning spouse's account for Social Security. Now, that higher earning spouse cannot be taking benefits. So the higher earning spouse has had to suspend. They have to say, I'm not taking them. I'm going to get that 8% increase. And then the spouse can file on the higher earning spouses and take their benefits. Okay? So, again, the spouse with the higher earning cannot be taking benefits. They have to suspend. and then the spouse takes them on there, but the spouse is suspending for their own benefits. If the spouse is 62 and wants to do this, again, remember there's a reduction of what they will get if they're 62. So it's about a 30% less amount than what they would get if they were full retirement age for the higher earning spouse's amount. So the higher earning spouse's amount less 30% is what the spouse would get if they were 62. Okay? If they wait till their full retirement age, they would get what the higher earning spouse's amount would be. Okay? So it's definitely something to think about. That's why it's complex, but it can be a true benefit, and it does not affect either spouse's account. So the lower earning spouse, if they take the benefits on the higher earning spouse's account, it's not depleting the higher earning spouse's account. It's not depleting the lower earning spouse's account. It's just a part of the planning on this of how to benefit from Social Security payments. And by the way, if you've been married several times, your ex-spouses can claim Social Security benefits on you if you were married at least 10 years with all of your prior spouses. It's very odd, I find it odd, but your ex-spouses, if they have not remarried and were married to you 10 years or more, they can go claim at their full retirement age, they can go claim benefits on you, on your account. Very, very interesting. So I want to point that out. Okay, so again, lower earning spouse can sign up for benefits based upon the higher earning spouse, but you need to think through this very carefully. You know, when does everyone need to start taking it? Because as soon as the higher earning spouse needs to take their benefits, the lower earning spouse needs to start filing on theirself and start taking their own benefits. Only one can be taking it against account at a time. Okay, so we're going to move on to the next slide. We talked about it doesn't affect either account. It's actually just kind of an additional benefit. And then you do decide when each of you need to start pulling, and then you would pull against your own account. I do suggest, and then this is on a further slide down, where the calculations are complex, to check out the Social Security website. They have some good information there, but if you really want to figure out this, they're really good. You do need to talk to Social Security or make an appointment and have them take you through what those benefits would look like. I do have some great financial planners that are experts at this that work on this all the time, but I can tell you Social Security is very helpful about it as well. Okay, we're going to move on to our next slide. Medicare. So we're working now on a slide that says, when should you sign up for Medicare? Well, the question is, are you still working when you turn 65? If you're still working when you turn 65 and you've got fairly good insurance and you are not the one paying for the whole insurance, you might want to just wait to sign up to Medicare until you're not working. So if you have fairly good insurance and you're not the person footing the whole bill, you probably want to wait to take Medicare until you're not working. If you are the owner of the business and you are paying the whole weight of the insurance, you might want to sign up for Medicare at 65. So you have to think about, what do you have now? Are you the business owner? Is this going to bring your premium costs down by having Medicare? And if so, you probably want to sign up for Medicare at 65. Now, let's go to the next slide. Because it's not 65, it's 3 months before you turn 65. Okay, they've all these little wrinkles. This is why this is complex. The wrinkle is that you have to sign up for Medicare. The paperwork has to get going so that you really have Medicare ready to go to the doctor at age 65. You have to sign up 3 months in advance of turning 65. If you do not sign up 3 months before you turn 65, you have to wait to sign up for Medicare, and there is a 20% penalty that stays with you your entire life. by not signing up on time. So you have to really be careful about when to sign up for Medicare if you're going to do it. And, of course, Obamacare in here. If you're an employer and you have to have insurance for employees because of Obamacare, you probably don't want to sign up for Medicare right away as long as you still have the business and you're required to have it. But these are things to think through. The next slide is to sign up before you're 65, 3 months. And you don't want to have that penalty for not signing up on time. It is complicated, and I do have on the next slide that there is great resources for this. There is a group called the Council on Aging Orange County, and I have their phone number here in the slide. So if you live in Orange County, Riverside County, San Bernardino County, Mono County, Inland Empire, if you live out that way, Council on Aging Orange County are the Medicare specialists. They're the Medicare counselors by these counties to help you go through the Medicare maze. They actually will go through the different Medicare fund plans for you and find out, talking with you, what the right plan is for you, but also just how to sign up for it. So I would deeply suggest that to get through this Medicare maze and you're in one of these counties, I would talk to Council on Aging Orange County. They're fantastic people, great resource. Okay, so we're going to go on to a little bit more final points about Social Security. It's clearly complex. If you're just listening to me, you clearly hear that there's planning involved. Should you take it at 62, where it's a 30% decrease, 63 at 25% decrease, 64 at 20%? Should you wait for full retirement age? Make sure that you don't get hit with making too much money before your full retirement age. Should you wait till 70 or somewhere between full retirement and 70? You can see that it's a lot of ins and outs. It's not really simple to go through, and you need to have these calculations on what this means. So I do suggest that if you don't have a financial planner that is an expert at this and has gone through this, that you check out the Social Security website. I can go through it with you and help you with some of this. We want to set up that Social Security account for you on their website so we can get exact numbers and really plan through when does it make sense for everyone to start taking that. So that's what I have to say is that a lot of things to think about. You know, I've been doing a lot of research on this for quite some time, but it doesn't make it easier. You really have to kind of figure out, when do you need it? Who needs to start taking it soonest? What's that benefit going to be? How does that work into preserving the rest of your retirement money? You know, so there's a lot that you need to think through here and get help with so that it can be done well for you. So that's what I have for this evening. And of course, you know, if you have questions, you can certainly call me. But I would be happy to go to the Social Security's website with you and let you know where the additional information is, or work through the information I have. Again, just to make it a little clearer for you. So, do we have any questions, Jeff?
Monica, we do. There was a question that came through the webcast. It was, what's the website address for the Social Security Administration? And I believe it's ssa.gov. That's ssa.gov.
I believe that's correct as well, but I will tell you, go to Google, put in Social Security Administration, and they'll get you right there as well. But I do believe it's ssa.gov, and you'll get right to that site.
Right, and the phone lines are open, so if you're listening on the phones and you have a question, you can just go ahead and speak up, and we'll take your question. Monica, let me check also to see if there's any other questions on the webcast. And again, I don't see any. I think, as I mentioned at the top of the call, if you want to download the slides, there's a lot of information that Monica covered on the webcast. If you're listening live, you can just click the download slides button. That's a PDF of everything that Monica covered tonight, and that should be able to be downloaded and or opened. And Monica, I don't hear any phone call questions. If somebody has a question after, go ahead.
Yeah, on the suspension, if the spouse is already taking Social Security, then you're going to get to where you're fully retired at your age. We'll use 66. The way I understood it, as you can switch and have your spouse take your amount that you would have got at the full retirement age, suspend hers, and then hers would increase by 8% per year. Is that correct?
Yes, as long as you're not taking it, she can switch and suspend hers. She has to be full retirement age, okay? So if she's taking it at 6, yet she has to be full retirement age to do this, otherwise she doesn't get that 8% increase in hers. So if she's taking it at 62, it won't work because you have to be full retirement age to defer and get the 8% increase on hers, and then she could switch over to yours as long as you're not taking your benefit.
So she took it at the earlier of 62, but now she is past the full retirement age.
Yeah, as long as you're not taking yours and she's now full retirement age, she should be able to defer, suspend hers, and work on your account, and therefore get the deferred credits on hers at 8% a year until she's 70, or until you start.
So then basically it becomes a numbers game as far as the 8% on your amount as opposed to the 8% on her amount, and the difference between what she's getting and what she would get as yours.
Correct.
Yeah. So it just becomes a numbers game at that point.
That's right. That's what all this is. Yeah, exactly. Okay. And yes, the Social Security website is ssa.gov. That is the Social Security website.
Okay. That's good information because that most people don't know.
Yeah, it's all a numbers game. But again, for her to stop hers, she's got to be full retirement age, and then you have to be full retirement age and not taking yours. So those are the points. Yeah. Okay.
So then on the other hand, if you're still working and you switch, okay, and you're on Medicare already,
you're going to switch what?
That doesn't affect anything for Medicare if you switch.
No, just that you may get billed if you decide to suspend yours. Yeah.
So now the Medicare, if you continue to work and you're on a salary, they're still deducting Medicare from you. So
yes, they are.
And that doesn't affect any of this stuff being suspended and changing this. That would not change anything then.
No, it's just adding some additional credits in your account because you're still paying into the system, but it doesn't affect it. Remember, and we are all working at the fact that people are putting money into the system, and that's the reason we can still pull benefits. So if people stop working, there would be no benefits to have. So the fact that you're still working, yes, yay, there's money that can fund Social Security and Medicare.
So then as you go forward, then you continue to pay Social Security even though you're getting it. If you're working on a salary, you would.
It's a mandatory. It's a mandatory requirement for anyone that's working. There is no shutoff because you turn 65 or 66 or 67 or 70. It is a mandatory amount that must be withheld for anyone that has wages.
Okay. None of that is, once you stop working, nothing is deducted from Social Security other than your Medicare. You can pay it through your...
If you're taking Social Security and you are signed up for Medicare, they will always take your Medicare out of your Social Security benefits. If you're not taking Social Security benefits but you want Medicare, you will get billed. And remember also, they are a month behind. So if you're taking Social Security and you want to start deferring or suspending, it will take them about 31 days to make that change, okay? And sometimes it's a little longer. So just know that they're always working behind. The day that you call them or write them and say, I want to suspend or defer, it takes them a good 30, 31 days or so to make that active, okay? So that's why you want to sign up for Medicare 3 months in advance because it takes them even longer on the Medicare front.
So once you're signed up, if you do the switch with your wife, that does not affect Medicare at all.
No. You can still have Medicare. It's just a matter of whether you're going to start getting billed, and you won't get billed for a month. So you have to make sure you plan with them very carefully about not losing Medicare benefits because you make this switch. So be very.
Actually, they bill 3 months at a time.
They may, in some cases, I have seen many cases. Yes, I have seen it where it is month by month. But if you can get it to do that, then it shouldn't be a problem.
Okay, great. Thank you.
Okay.
And again, the lines are open, so if you do have a question, just go ahead and speak up. And Monica, let me check once again on the webcast, and I don't see any questions there. And I think that's it. Monica, for the people that are listening on the replay that may not be a client of yours, what's the best phone number and email address to get a hold of you if they do have a question about any of this?
Sure, absolutely. The email address is mrebella, which is spelled MREBELLA, and then at RebellaCPA.com. Probably the best way to reach me is by the email. And our phone number is 714-619-0667.
Great.
I have one more question.
Okay.
Sure, go ahead.
Okay. As I'm doing this, I'm here. Where do you see the slides? Because on my phone, the slides don't come up. Is there something else you have to do to see the slides while you're talking?
You know, it may be a technical issue with the mobile device that you're on. The webcast is probably more desktop friendly for a large screen, and that may be the issue. But since you're on the call and we've got your email address for the registration, we will send out an email probably tonight with the replay link, and it'll have a download link for the slides.
Okay, great. Thank you.
You're welcome. Anybody else tonight? Okay, well, Monica, thank you so much. This has been great information. Appreciate it. And again, if you're listening on the replay, we want to thank you again for listening to the call with Monica Rebella CPA, titled Social Security and Medicare Planning Tips. And if you do have a question, feel free to contact Monica at the email address or the phone number that she gave. So, Monica, any closing thoughts?
No, I appreciate everybody's time, and Jeff, your time as well to do this, and I hope that everyone got something out of the webinar. If you have any questions, get a hold of me. Have a great evening. Thanks so much.
Thanks. Good night, everybody.